Good day, everybody. It's Greg Schnell, and I am here with your daily 5 charts. Lots to talk about today. I want to spend a little bit of time on my first chart. And one of the things that we notice during an uptrend is that all of the charts tend to behave the same while it's going on. And then sometimes they can roll over together as a group, but usually, or not usually, but a good percentage of the time, we'll get a point where a few stocks will continue to lead everything and the rest of the stocks will start to fall away. And what we see in the current market situation, and this is using a 60-minute chart over the last 2 months, and the idea behind the chart is just to show from the bottom of the uptrend that everything was moving in sync pretty well together. Now, they may have moved a little higher than others, but they were moving pretty much in sync. And what we see recently is that the Russell went on to a new high and now really has pulled back and hasn't been able to take that out, whereas in the green line here, this is the NASDAQ, and the NASDAQ went on to a new high, and then another new high, and another new high. And I've drawn a line connecting the peaks in here. But the point being, the NASDAQ is still making a new high. Whereas when you look at the black line on the Russell, you can see we're clearly nowhere near making a new high since the Fed meeting on the Wednesday, January 29th. And then on the S&P 500, we have the same dynamic where the S&P is running up here. And the scale on the right-hand side is a percentage scale. Why I've done it like that is because then it doesn't matter we're comparing based on the same thing. So the percentage move off the bottom. Now I've also changed the height on the S&P. So it's not underperforming by this much, but by changing the height, I was able to keep it so it was separate. So I just want to make sure that people don't try to duplicate it and end up with something a little different. So what you see here is you've got an uptrend on the red line in concert with the green line and the black line up until the Fed meeting. And since the Fed meeting, everything has kind of mellowed off. Now, there's more to this story. One of the things that's happening is the momentum indicator on the S&P 500, and I use the PPO. It's already at zero and just barely holding above it. So if that was to start rolling back into negative territory, that would be the first time that it rolled into negative territory for a while. So we want to be aware of that change in tempo, and it rolled into negative territory and then pulled back out again. And when it did that, it didn't do it with much force. So we really want to be aware of the market softness here. One of the top performing areas of the market since the lows has been the oil rally. And what we can see here, I'm using exploration and production here, but this was down at 30 and made it up to 55. This was almost, call it a 90% move, which was tremendous. Obviously, it fell a lot further, but it was a tremendous move off the lows. One of the things that's just started to happen in the last couple of days is the uptrend that we had in place has started to wane. And again, the PPO and I'm using a 60-minute chart, and the reason is because the moves we're getting in a few days are equivalent to annual gains, and a weekly chart really, by the time it rolls over, it will be way too late. So unfortunately, I've had to use shorter time frames. Now on Tesla as an example, as Tesla went on to hit $800 last week, the PPO on the weekly chart still had not given a buy signal, and it was already up $350 off its lows. So the weekly charts with this level of volatility, while they're indicative of a bigger trend, the problem is if you're trying to make money and waiting for that signal in a highly volatile environment, you're going to probably give more money back than you take out. So here we are with the uptrend on energy, and we're breaking that uptrend in the last 2 days here. So it's early, but one of the things we see how the momentum indicator picked up and stayed up around zero, and right now our most recent bounce here wasn't really much to talk about. We had one similar right at the lows. And now the real question is, does it break down? And to me, it looks like that's what it wants to start doing here. So I just want to make everybody aware that if the uptrend is going to start to break on some of the I'll call it faster performing areas of the market, we might find that it's too slow, or that it's starting to change tempo. Semiconductors are also leveling off, and one of the things we saw right after the Fed meeting was they broke the uptrend. Now, they've been holding in the range of the uptrend, but again, they're not making higher highs like the NASDAQ is. So far, they've made lower highs, and I've drawn another trend line in here, a light colored trend line in blue, a blue dotted line. What it shows is there's, I'll call it an uptrend that's not as aggressive as the prior uptrend, and maybe that could hold for us here. So watching the semiconductors to see if they can get any heartbeat higher, but when I go look at AMD, it's rolling over pretty good. NVIDIA was trying to take out its prior high, so we'll see if they have some. And again, I'm not usually this bearish, but what I'd like to point out is preservation of cash after having a huge downtrend, and I'm sure there was a lot of people that were frustrated by it at the bottom. To me, this is starting to show signs of wariness. So we still have a bit of a move here. A $5 move on $130 would trigger a signal. And what we see in the PPO is on every push up higher, we end up with a lower high. And so each one of these rallies is getting weaker. If it starts to fail around zero, that's a real problem. And over here on the left, we can see in late February, that's what was happening. And in early March, it got a bounce, just got up to zero and failed. So we kind of have the same situation setting up here. So interesting to watch the semis over the next week. Railroads are one of my favorites for industrial activity, and again, I want to see the railroads outperform. Now, what we've got here is an uptrend, and I've used a more shallow uptrend. If I went off the lows, obviously, it wouldn't really match up with anything, so I've used a shallower uptrend. What you'll notice is the PPO is rolling over right at zero here, or sitting right at zero. So if it can't get any heartbeat, which is what it had back in late February, all of a sudden it really fell hard. We want to make sure that if that's going to happen, we're aware of the trend change. So that's another chart to watch for. And the last one is the FAMDANG groups, and that's Facebook, Apple, Microsoft, Disney, Amazon, Netflix, and Google. What we see is this big solid uptrend, and a lot of them are holding on their uptrends right now. So if that's going to continue, that's great. If they're starting to wane, and again, this is Amazon, it's been 3 or 4 weeks, it hit its high, tested it, broke out and failed immediately the next day, and hasn't been able to gain the moxie. So just watch, and again, the PPO momentum is tempting here, but it's rolling over right at zero. So with that, last thing I wanted to point out is GregSchnell.com has been improved. We've fixed, the website is much more developed now, and I've actually got a second chartered market technician working with me now, Dwight Galusha, and we're posting 5 trade setups per day on there. And you get all of these different things on the service, and hopefully you'll find some value there. My Schnell Strength Index, which is one of the things that most people like about the site, is currently at 63%, which is tepid. I would just say not enough momentum to keep us going. And lastly, if you were interested, just now with Dwight on board, I've got a special going on the private investors tab for annual memberships. You can save $360 and use the coupon code DAILY5. So with that, thanks for taking the time to join me. Once again, wishing you the best in the market, but to me it looks like a time to stay safe. Thanks everybody. Bye-bye.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.